The market had a strong reversal today after an indecisive trading day that took us right up to about the same levels that it reversed before. Notice the evening star signal over here at the top of this trend. Now we're right back up testing that level, and we sold off today. The only thing that might tell us we could still possibly be in an uptrend is that the Dow closed right on the T-line, and the NASDAQ closed right on the 50-day moving average. So it'll be very important on how they open the markets tomorrow. If they trade positive, that tells us that the T-line and the 50-day moving average were acting as support. If they start opening lower tomorrow, that tells you the support levels aren't there anymore, that they're going to be heading down further. In the case of the Dow, we might be coming back down to test the November lows, creating this trend channel, moving sideways, but taking 2 weeks in each direction to get to the end of each trend channel. This same analysis can be applied to individual stock prices. Notice that we had on the HGG chart, we'd come right back up to the resistance level. We saw a dark cloud one day, came back up, tested the level one more time, and saw a bearish engulfing signal, which was good indication that they were not going to break this out into new territory. They were going to pull back. The pullback possibly could have supported on the T-line. The T-line is the 8 exponential moving average. T-line is short for trigger line, that as long as you're trading above the trigger line, you stay long. When you start closing below the trigger line, the T-line, it's time to close out long positions. Here's a case where you can do very simple analysis to say if you see a candlestick signal, a dark cloud, followed by another candlestick signal, a bearish engulfing signal, probably the bears have taken control, and if they've done it right here at specific technical levels, gives you a good indication with a high probability assessment that the price was not going to go through. There's too many signals that tell you that the bears have started to take control. The reversal signals worked extremely well, to the point where if you see a change of a trend that is not a signal, notice that this is not a bullish Hiromi. It opened below the previous day's close and closed below the previous day's open. It is not a signal. Stochastics are still heading in a downward direction. If it's not a signal, that has an implication. It implies that there is not a reversal, that this may just merely be a profit-taking up day for shorts before the trend continues back down. These simple rules and common sense applications allow a candlestick investor to analyze a trend with a very high degree of accuracy. That'll be it. We'll see you in the chat rooms.